Hello everyone and welcome back to the channel. Guys, in this video, I'm going to explain to you guys step by step how to trade the 112. Okay? There are plenty of versions as you guys probably can see and can find on YouTube, but I'm going to show to you guys here a couple of them. One which is pretty much a LT, a little bit more longer term version. Another one which it is a short term version, but both of them pretty much emphasize one thing, which it is, guys, capture premium, because both of them we treat them as an income generator strategy. Okay, as an option seller, we want to sell volatility. We want to pretty much put the time decay in our favor. It doesn't mean we're going to make money purely on time decay, but that's what we want to do, we as an option seller. Okay, and of course, if I come here to trading view, times like this, it is even better to apply this strategy. Why? Because as you guys can see, since November last year, when J. Powell pretty much announced that they was going to stop raise rates, the market doesn't stop to go higher. We put here a new higher higher, we put back here a new higher low, higher higher, higher low, higher high, higher low, higher high, higher low, and so on. So we have this beautiful, beautiful zigzag chart here to the upside. It cannot get better than this, okay? Of course, there's a lot of doom and glooms on YouTube right now, calling this for a massive crash. When the Fed starts to cut rates, all the time the market crash. Guys, nobody know. I don't know. Nobody knows. That's the end of story. The thing that we know is we're still trading and investing as a usual, because guess what? The market can crash tomorrow, the market can crash in the next 5 years, or the market can still go up for the next 10 years. What are you gonna do? Cross your arms and just sit back and lose all these games? No, we're gonna trade the proper risk and trade management, especially times like this when we're going to use the 112. We are going to pretty much wide, okay, our hedge part of the trading system, which it is our debit spread, and we're gonna sell our put here a little bit lower, because if we were to get assigned whatever product might be, the SPX, SPY, the futures, guess what? We are going to hold this thing here for the long term, because we're going to get assigned on 24% pullback, 20% pullback, 15% pullback, and so on. Okay, and for those of you that are new to the channel, I don't know if it's this one here, let me see. This one here, guys, you guys can learn how to trade options for free. Just come here, click this link, and go from zero to here. This is all the basic things you need to know as an option trader, especially if you do sell options. And from here, we got plenty of contents in our channel which you can also learn for free. We got plenty of videos, guys, plenty in our channel, so you can just come here and watch and learn as much as you want. All these contents here for free, by the way, okay? But nevertheless, going back here to the SPY, times like this, like I said to you guys, it's perfect for us to put the 112. Is it better on pullbacks? Of course it is. But in these times here, guys, we can capture what we call the gap, because that's what we want to capture our premium, because the gaps which is going to make us the most of our money. And you might ask what the gap means. I'm going to explain to you guys why now, okay? For those of you that haven't heard about the 112, the 112, it is, guys, very, very simple, okay? It's very, very simple. So basically, we are buying here one debit spreads, and we are selling here two naked put. But this naked put here, you can treat this as a care secure put, because the thing is, from here, what I think is, let's say for example, you trade here stock, let's trade in the all-time highs like the SPY now, okay? And then your two care secure put, it is down here, let's say at 20%, okay? If the market crash tomorrow, pulls back, whatever it is, you're going to capture this premium here, which is the debit spread. You're going to make this money here. And if you do get assigned here, this might not be naked puts anymore, okay? Because from here, if you get assigned, you can take assignment, you can turn this into a covered call, okay? So you can sell now two contracts, because you're gonna hold here 200 shares, whatever product might be, the futures, the index, the ETFs, whatever. Or you can keep selling naked cash secure puts or naked put, whatever you want to call it, and convert this thing here to a covered strangle. You have the shares, then you can sell calls and puts and still holding the shares. So the sky is the limit. That's what I always say to guys. It's not actually naked puts, because you can treat this however you like. You can treat this as a naked put. You can keep rolling the trade, postponing the purchase of those shares, or you can convert this to many strategy. Okay, but nevertheless, let's treat this as one debit spread and two naked put. So basically, what you're gonna do is very, very simple. Okay, the stock is trading up here. We're gonna buy here a long put. Okay, we're gonna buy to open. Okay, very, very simple. And we're gonna have a gap here of, for those of you that are starting out with the stock market trading at the all-time high, I suggest you guys here leaving 100 points wide. Okay, because you can capture more if this thing were to sell off tomorrow, if we have a 10%, 15%, 20%. Okay, of course you're gonna have to sacrifice something, because we are going to buy to open here. We are going to sell to open here, because this debit spread is going to be capped as on our short leg here. And then we are going to sell here. This is one. Okay, this is one. This is two. We are going to sell our naked puts all the way down here. All right. And here, your deltas, why now? With the stock market trading at the all-time highs, guys, I go something between 5 to 10 deltas. Okay, the long put here, you're gonna start at the 25 deltas, which I'm gonna explain to you guys in a second. Okay, once you have here your 25 deltas for your long put, your short put, you just look below 100 points, whatever that number might be. Okay, which I'm also gonna show you guys on our TastyWorks platform. And then you're gonna go down and you look for those 5 deltas to 10 deltas to sell your 2 naked puts. There's 2 ways you can do this. Okay, the long term, what you're gonna do is, the long term, you're going to sell your debit spreads at 120 DTEs. Okay, and you're gonna sell here your naked put at 90 DTEs. Okay, in the short term, you're going to sell here your debit spread at 90 DTEs and your naked put at 60 DTEs. Okay, and of course, when it comes to trade management, right, my debit spreads, guys, I don't mind to let them expire out of the money. I don't really care, because it's already paid off by the naked puts. That's fine. But the naked puts, okay, because I'm willing to get a sign. Remember, the word here is willing, okay, to get a sign. If you're not willing to get a sign, you can be a little let's say, more aggressive, and you can close this thing here at 70%, 75%, because I don't mind to get a sign on something here which is down here, will be like what, 20% or 30%. Guys, I want to close this thing here at 95%. Simple. At least, unless if some extra thing happens, if this thing here decay, let's say to 60%. Let's say that was supposed to expire 90 days, and after 2 weeks, it's already expired 6%. I'm gonna close the trade, because I'm gonna calculate what I'm getting annualized. That's the main thing you guys need to take in consideration. What you're getting annualized. If you close the trade now, okay, you open for 90 DTs, but let's say 20 days gonna pass, you got 70 days left. If this thing has decayed, let's say 60%, I'm gonna close this trade and I'm opening one, because annualized, I'm not getting any more 10%, I might be getting 15% or maybe 20%. That's the sort of things you need to take in consideration. How much annualized you're getting if you close your naked puts. Why now? After so many days has passed. If you open naked puts at 90 days to expiration or 60 days, if you're going to close after 2 weeks, calculate your annualized return and see if it's worth. My goal like I always say to guys, when it comes to annualized, is roughly 30 plus. Annualized, my rate of return, if I make 12 to 15 per year, I'll be over the moon. Okay, but very, very simple. But basically, this is how the 112 works when it comes to placing the trades. Okay, very, very, very simple. Let me delete this thing here, this mess, so I can explain to you guys a couple of things. Okay. Anyway, you guys can go back, you can rewatch this thing, you can write down, because it's much easier, guys, to do this thing here from the top of my head than I write Word, PowerPoint, those kind of things, okay? So basically, very simple. On this debit spread, we're gonna pay here a debit, and this thing here, we're gonna collect a credit. And at the end, we're gonna have a plus credit here. Okay, remember, we are capturing premium, because you want the time decay to work in our favor, right? So nevertheless, let's go into TastyWorks right now. I'm gonna explain to you guys. Remember, we have here our strike price, we have our DTs. Very, very simple. We're gonna use here, which it is the short-term one, which it is the 90 DT. Okay, remember I said to you guys, we can have 90 DTs for the debit spreads and 60 DTs for the naked put, or we can have 120 for the debit spread or 90 DTs for the naked put. That's the way it works. Okay, the first thing we're gonna do here, remember, we are going to look for the place, for the strike price, okay, for the strike price for us to sell, for us to buy our debit spread. And the debit spread starts with delta. That's the first thing you need to pay attention, is the delta. How much it is the long leg of the debit spread? It is starting with a delta of 25. Okay, so we come here on the delta column and we need to find the delta of 25. So basically, the 25 delta is giving us the strike price of 5,650. Okay, so we're going here to buy this leg here. Okay, and of course, what I said to you guys, we are going down the chain 100 points. Okay, 100 points. Of course, some of people on YouTube might say you guys to buy with the 50, things like that. But with the market trading at the all-time highs, I'd rather to have a little bit more cushion on this so-called hedge, because it's not a hedge. It's just a way for us to capture a little bit more money if the market were to be on a bearish market like this, like 2022, which was a dream come true. Okay, was very, very good, because if you take a market like 2022, okay, which goes like this, on a zigzag down without the crash like this in 2020, you can make a lot of money. Okay, so fine, we found our 25 delta, we bought here our strike price. What we're gonna do now is we're gonna go 100 all the way down, 5,650. We need 5,550. That's it, is our 100 points lower we are going to sell. So basically, we are buying here this DS debit spread, and we pay here 14.75. Okay, of course we have to multiply here by 5 because we're using here the EMS, okay, MES, which it is the micro e-mini. Of course, if you have a large account, you can use here, guys, the ES. Or if you have a large account, you can also use the SPX, or you can use the SPY. Of course, the only thing you need to pay attention, you're going from futures to index to ETFs. That's the main thing you need to pay attention, because your margin here and here, it's not the same as here when it comes to trading futures, okay? Anyway, all good, done and dust. Now we're gonna close here and we're gonna go down the chain. We're gonna look for something close to 60. We don't have anything close to 60. The closest one we got, it is 65. So we're gonna open here the 65. Remember I said to you guys, with a delta of roughly 5 to 10. If we get here the first 5 from the bottom, 4, 5 will be this one here with the strike price of 4,775. We're gonna click here to sell, okay? And we're gonna sell once, we're gonna sell twice. Remember, this is the way it is. We are buying one debit spread and we're gonna sell 2 naked put or cash secure put, whatever you wanna call it, okay? So the ratio here is 1 to 2. You can do this 1 to 3. You can do 2 to 3, you can do 2 to 5, you can do whatever you like. The main thing you need to pay attention is here. That's it. Because remember, guys, futures, when it comes to sell off, this thing here can expand quite a lot. Okay, what I do is, whatever trading account I might have, large one, smaller one, medium size, interactive brokers, TastyWorks, the whole thing of my portfolio, the whole trades, the open trades, never exceed 40%. Because if this thing here were to expand and double, the whole portfolio will go up to roughly 80%. And if we do really have a massive crash, we might get close to 100%. But of course, by then, we can close some trades. We can open some more debit spreads to free up some margin power. We can buy some long calls. There's plenty of things we can do. Okay, the only thing we cannot do is let this thing here to expand and get margin call and close the trades that in the future we end up being amazing trades. Why? Because remember, we're not doing this thing here, guys, on crap stocks. We're doing these things here on futures, index, and ETFs. And I really suggest you guys stick with this. Because remember, if you do this thing here, and if you get a sign 30% down here on AMC, GME, whatever stock might be, good luck to you waiting for this thing to recover. Can it recover? Of course, any stock can recover, but our goal it is to get a sign on something that we know it must to go up, it must to recover. And it is, guys, the stock market, simple. The SPY, SPX, ETFs, futures, it must recover, and they will recover, okay? And of course, as you guys can see, we are collecting here 15.5 in credits. And of course, we also have to multiply this by 5. Okay, always multiply that by 5. Very, very crucial that you guys do understand. So basically, what we have here, we have this thing here, guys, which it is our cushion. If this thing do drop all the way down here, from here to here, we're gonna have here our max profit. And our max profit here, actually I can calculate here for you guys so you can have a look. Let me leave this thing here. Here we go. Our max profit of this trade, okay, will be $580, which it is, guys, this gap here, this zone. Okay, this is our maximum profit in this trade. If you have the stock market to drop to this, let's call this trap, the value trap, the gap trap, whatever you want to call it, okay, we're going to capture the maximum premium. And like I said to you guys, in markets like 2022, that drops like this, which are proper bearish markets, this thing here is a dream come true. Markets that drop like this, like the COVID, there's no strategy that can sustain drops like that, unless if you are short the market. And if you try to short the market and time the market, good luck to you. Look at all those genius billionaires losing billions of money, millions of people's money trying to guess the market, and they never get right. Never, never, ever, ever, ever. Okay, so basically, if this thing here doesn't do anything whatsoever, we can still make money. Okay, why? Because that's the way it is. And we can still make here, guys, if this thing here were to trade all the way up here, at the end of the day, we're still making $77.50. Okay, why? Because we collect this money here and you multiply that by 5. So from here, if the market stay here the next whatever days might be, because remember, this is our naked put. This is our guarantee money, guys. Okay, in terms of collecting the premium. Doesn't mean it's gonna be our maximum loss, maximum gain, but this is ours. We are collecting this thing in the beginning. It's ours to keep. All right, and of course, if we drop all the way up here, as you guys can see, we can make even more. And of course, this can help us also to lower our base cost if we do get a sign. And this is one of the best strategy ever. But of course, another thing as well, if this thing starts to drop, okay, drastically, in other words, 5% today, 3% tomorrow, 7% after tomorrow, you need to make sure you know how to manage this trade, because what you can do is we can have something like this. Okay, then you can keep building up these gaps here, guys. Okay, so instead of having 570 here, you're gonna have like 1,000, 2,000, but it's all in relation to this thing here. That's why I want to keep, let's say, 30 to 40% of my buying power, because in the market sell off, it's even better to place this strategy, because your short put won't be here at this level here, 4,775. It's gonna be all the way down here. Okay, and if we go here, let's say to my TastyWorks or TradingView, Look at this, for example. This is the SPY, okay? But if I get the E-minis here, let me get the E-minis. I build this indicator here that can tell me the levels. So if the market dropped tomorrow to 30%, as you guys can see, our naked put is going to be all the way down to 4,137. It doesn't going to be at 4,775 as the example that we saw on TastyWorks. And if the market drop, let's say 40%, it's going to be all the way down to 3,546. So it's going to be 40%. And if we do drop all the way down here, from here, guys, I'm not even selling covered call anymore. I'm not even selling the cover strong anymore. I'm going to hold this thing here for the long term. Thank you very much. I just got a sign on something at 40% that was trading at the all-time highs. And I also made some money on the way. It cannot get better than that if you guys get exactly what I mean. Okay, very, very powerful strategy, especially for those of you, okay, that have never traded options before. If you master this strategy, okay, especially using the MES, which is the macro E-minis for the small account with the proper risk and trade management, can be the best strategy ever. Of course, this one here, 112. The covered strong, the covered call, the cash secure put. These are just tools that you must have in your toolbox. Okay, tools that you must have on your toolbox, because a strategy for every scenario of the stock market: bull market, bearish market, sideways market, crash market, slowly grind down market. You can use all this strategy, and that's what I do myself, and that's why 2023 I made over, guys, $500,000, as you can see in some of the videos. For example, if you go all the way here and watch this video here, you guys can see what I show you guys, my portfolio here. It TastyWorks, by the way. TastyWorks doesn't offer, guys, demo account, if you get what I mean, okay? Very, very, very powerful strategy. And I use all this for. If I go back here to this thing here, so basically what I was saying is the cash secure put, okay? Another one, it is the covered call, the covered strangle, covered call here, covered strangle, the 112, okay, lips, and of course these lips here, or this covered call, you can use poor man's covered call. That's plenty you can do. This cash secure put, you can transform into these two, okay, or you can transform this thing here into these two here. That's how powerful it is. That's the way it works. If something bad happen, you can manage. If you cannot manage, transfer to this. If you cannot manage and transfer, guess what? We're holding for the long term. In other words, the Mr. Market can never get us. We're always going to be one step ahead. Why? Because we know how to manage and how to do the trade management. Because when it comes to trade options, the reason you're going to lose money, the main one is wrong position size. And the second reason is don't know what to do on the worst times. If you know what to do at the worst times, you're going to be way ahead of everybody else, okay? Guys, very, very simple. I hope I have added some value to you guys. If you have any question, don't hesitate and leave on the comments below, and I'll get back to you soon as possible. But the 112, okay, you can even do 111, is up to you. In bull markets like it is right now, you can even do like a 111 or a 112. The reason why I said 112, because that naked put can be all the way down here because you're selling twice. If you do 111, your naked put is gonna be here. These are 111 or 112. I suggest number 2. Why? Because you can lower your strike price a little bit for the naked put if you're selling 2. If you were to sell just 1, you're gonna have to have a higher delta here between 10 to 15. Here you can go something like 5 to maybe 10 or maybe 12 if you get what I mean. Okay? Anyway, thank you so much for all the beautiful support from all of you around the world, guys. Thank you so much. If you want to support the channel, don't forget, subscribe to the channel, leave your comments below, and click on the links in the description. Got plenty of things for free for you guys, trading journals, all those good stuff, so you can download for free. Don't forget to join our Discord group. It's free, by the way, okay? Subscribe to the channel, leave your like behind, and leave your comments, and I'll be much appreciated. All the best, stay safe, and happy investing.